Hey traders, what a wild and crazy week. This week in SPX actually reminded me of a line in one of my favorite TV shows. If you know the TV show, you can put it in the comments below. But we took the scenic route, but we ended up in the same spot. And you can see that because we really only closed 16 points higher on the week than where we opened. In fact, if I change this to a weekly chart, you'll be able to see it even clearer. But that's not because we didn't move throughout the week. Oh no, we made quite the journey. We started the week off higher, hit the weekly H1 on these quant pivots, came all the way back down, nearly touched the weekly H2 before ending right back where we started. Now, it wasn't quite the same story for the NASDAQ. Tech had quite a bit of selling. That's mostly just due to software stocks that had a really nasty sell-off. I think I saw that they lost about 30% this week. Mags really couldn't hold up the NASDAQ the way that they normally do. Google and Amazon both had earnings, and traders didn't respond. Investors didn't respond positively to those earnings reports. So the NASDAQ really did have quite the sell-off. But let's head back to SPX because I want to go over some moves that we made, some trades that we did in the small lot trading room this week that actually really went well and took advantage of these big swings. So right here, this is Monday. And I want to point out this red line right here. That is the weekly H1 on the quant pivots. If you don't know me yet, you're going to hear me talk about the quant pivots a lot because this is an indicator that I use and reference every single day, and I place a lot of trades off of it. So this is actually one of John Carter's indicators, and so that right there should tell you how good it is. But what we're looking at is when we're looking at a particular time frame, what we tend to see is that price stays typically within this range of the H1 and the L1. The L1 is this first green line below. And then below that, we have the L2. Above the H1, we have the H2. And look, they really just kind of represent extreme levels. So price tends to stay within those first levels. And when they leave or touch those levels, we can oftentimes use that as a spot to fade that move. We did that twice this week and it turned out great both times. So this is Monday right here. We saw price rocket right up to the weekly H1. And then what we did in the small lot trading room is we put on a call credit spread. We did it for Friday's expiration because when we look at those odds, we're talking about the end of that period. So since this was the weekly quant pivots that we were trading off of, we wanted to use the end of that period. That was Friday, today, February 6th. So we entered a call credit spread where we actually went just a little bit above here, but we shorted the 7,005 calls. We did a 5-wide credit spread. We got a 260 credit for it. And then yesterday we took that trade off we bought it back for 50 cents. So basically we made $210 over the course of a couple of days. Now, Wednesday, we actually touched the L1. So that's what I mean when I say we made a huge journey because we rocketed up to the H1 and then a couple days later came back down to the L1. We don't typically see that very often, but I love that those opportunities came up. So it did bounce initially off of that level. We couldn't get a good entry on Wednesday, but that's okay. We got another opportunity yesterday, Thursday, price dipped below, and even though price closed below it on Thursday, look at what happened today. So yesterday, when I saw this move, we ended up doing the reverse of the first trade. We sold a put credit spread. We sold the 68.45 puts, which is right where this L1 was. Again, sold it for 260, took it off this morning, bought it back for 60 cents, so a nice $200 profit. Not bad for a small account when you talk about we made 2 trades, had $410 in profit on both of them. Worked out really, really nicely. So a lot of volatility this week. And look, I don't think that this move is necessarily over, but I think the big swings, I think we probably got that out of our system. Do think that we could still see some heaviness next week. There's a lot of negative gamma in the market, which if you are a subscriber to Spot Gamma, which I am, a lot of us at Simpler Trading are, you will have known that already just by reading through their founders' notes. There's still a lot of negative gamma in the market, which is going to make it heavy. Not only that, February tends to be weak into OPEX in midterm years. So I'm not really expecting a whole lot of bullish moves, at least nothing meaningful, until we do get through OPEX. But look, that's okay. We just made a new all-time high a week ago in the markets. 2025 was a great year. It's okay if we just kind of chop around, digest these big moves before we can make the next big move. So here's what I'm looking for next week. A couple of different things. Back to Spot Gamma, their risk pivot is still at 69.50. We almost touched that level at the close today, and what a close it was. Couldn't quite get there. But until we get a daily close above 69.50, I still got to remain really, really cautious, okay? Now, when we open up on Monday, we will have new weekly quant pivots. We don't know what they'll be yet because we have to wait for the open on Monday. But once those levels print, even if you don't have this indicator, you can have access to these to those levels as well, as long as you're a member in the Mastering the Trade room or the small lot trading room. In both of those rooms, I put those levels in the notes. If you're a member of Small Lot, then you'll see them in my personal notes. If you're a member of Mastering the Trade, you'll actually see them in JC's notes. So you'll go into JC's daily briefing and you'll see those weekly quant pivots. So even if you don't see me alert any of these trades off of the weekly quant pivots, by all means, I just showed you how I use them. You can do it too. So while we're in this negative gamma environment, this heaviness, I'm really sticking mostly to SPX. I still am trading some other tickers, but not as much. I just kind of want the market to work itself out, resolve, digest some of these bigger moves, regain its nice strong uptrend before I start trading more of those other tickers a lot. And you know what? It's actually been working out really well for me. If I go back through my spreadsheet for 2026, we've got about 5 weeks in the books now. Really what I'm seeing is that pretty much all of my profits are from SPX. On all of those other swing trades in other tickers, I'm kind of just flat. So that is also telling me just kind of really focus on SPX for now. Now, that doesn't mean that I'm not still trading other things. So this is one that we just put on in the small lot trading room today. This is Schwab, and I'll tell you why. Gosh, beautiful, beautiful, beautiful chart. It's in a very nice bullish uptrend, which you can see right here from this little guy right here. And then it's also in a really nice daily squeeze. Now I'm going to pause right here because I want to point something out about this squeeze. Do you see that? See what it says? It says ideal. What's an ideal squeeze? Well, I am so glad you asked, my friend, because I've been given permission to give you a little bit of a teaser. Not much. We got to wait for the big guy to really show us how this goes. But on Wednesday, John Carter, the man, the goat of trading, the kangaroo wrangler, he is going to be doing a webinar on his newest variation of his squeeze indicator. I am so excited for him to show this to all of you. You can register for that webinar by clicking on the link down below in the comments. We definitely want to see you there. I can't wait for you guys to see this new squeeze tool, because man, what an amazing improvement to an already fantastic tool. So make sure that you show up to that webinar. But back to Schwab. I noticed that we have an ideal squeeze in a great bullish uptrend while price is sitting right at the daily 21. So we got into the March calls. We got the 105 calls, paid 360, and really all I'm looking for is a move up to 110. If this squeeze fires long before my expiration date, it should have absolutely no problem getting to that level. And I suspect you could probably pick up these calls for the same or a similar price, maybe even a little bit less on Monday if you're lucky. So if you'd like to trade along with us, that is what I'm targeting. I'm targeting 110. I do, however, want to point out this snow line right here at 107.63. This is a voodoo line. A lot of times when price comes up to meet a voodoo line, it gets stuck. It can act as resistance. Now, snow lines aren't the strongest ones, so I'm hoping that it can bust through that. And certainly if the squeeze fires long, that should give it enough power to cut through that snow line. However, you always got to be prepared, right? So if it hits its head on this snow line and then it gets rejected, I'm just going to take the trade off. No reason to hold it and see a winner turn into a loser. But if it does get through, I'm targeting 110. Now, what if the trade just completely doesn't work altogether? When am I going to cut it? Ideally, I don't want it to go to zero, right? If it gets 2 daily closes below the daily 21, I'm just going to take the trade off. All right, so that is my plan for that one. Let's go through a few more tickers. This one sector, materials, has been looking really, really great. Now, it's a little bit too extended for me to get it right here, but let me show you what I'm going to be waiting for. So it made a really nice run right up to +3 ATR, came back down. It just kind of, it really didn't even touch it, but it came very close to this tree line right here. So now that's acting as support. If it can get a few more days of some sideways action, hopefully develop some intraday squeezes, this daily 21 can come up to meet price and the tree line right up in this area. That should act as additional support. At that point, if I can see some intraday squeezes, then I would love to buy some calls in XLB. And look, it is only a $51 ETF. So all it's really going to take is like a $2 pop, and you should get some really nice returns on those calls. So some levels above that I have, this snow line right here at 52.35. We've got another snow line up here at 53.66. So I'm just kind of watching it for now, but that's what I'm looking for. Another great sector that I'm looking for right now is home builders. A lot of great stuff inside. In fact, if we look in here, these are some of the top stocks within the home builders ETF. you can see that every single one of them is in a bullish uptrend. That is beautiful. And then if we look down here, you can also see there's actually quite a few that have an ideal squeeze. Lowe's, Home Depot, lots of good looking ones. So I'm going to go back and let's take a look at some of these individual names within the home builders sector. Sherwin-Williams, really like this one. It just started an ideal squeeze today. So this is a very, very fresh squeeze. So here's what I'm thinking with this one. I like the March 380 calls. You don't want to do February. Well, maybe you do. I don't want to do February because that's only a couple weeks away. And with a brand new squeeze, that's not giving it nearly enough time. Okay, so what we typically see in a squeeze, and this isn't all the time, but this is often enough that this is our rule of thumb. Typically what we see with a squeeze is that it will last for 5 to 8 bars before firing. And then once it fires, that will last for another 5 to 8 bars. So you want to give it at least a couple of weeks, right? February monthlies, that's just 2 weeks from now. Okay, so for me, I would want to go out into March. 380 calls actually aren't horribly expensive unless you have a small account. And then what I would be looking for are these extension levels above. 380, 387. Watch out for this tree line right here at 380 or 391. If it gets rejected there, you might want to take profits. If it keeps going, then I would be looking for this 1618 extension right up here at 397. Now, let's talk about how you're going to spend your weekend. Okay, we always talk about doing some pre-market prep or some weekly prep on Sunday. Let's talk about reviewing the last week. In particular, I want to talk about reviewing the last month. All right, we've finished our first month of the year. We've gotten through January. Go back through your spreadsheet, your trade journal, however it is that you track your trades. And I know you track your trades, but however it is that you track your trades, I want you to go back through all of your trades for January and look at what has been working really, really well and what hasn't been working so well, and see if you can make any tweaks to that. Do more of the stuff that's working, less of the stuff that's not working as we head into February. Like I mentioned earlier, my SPX trades have been working out fantastic. My swing trades in other tickers, not so much. So I'm just kind of keeping that side of my book a little bit light right now. I really don't have on a whole lot. I've got those Schwab calls that I opened up today. I have my Walmart butterfly that I opened up last week, and I told you all about it as well. Right now, that one's not working out for me, really not because Walmart's not doing anything great. It's acting a little bit too great. And so it shot right past my butterfly. So this is one of those scenarios of right chart, wrong strategy. So I'm just kind of hoping that it comes back down so that it gets back into the wings of my butterfly. But that's kind of it. I'm pretty light. Day trading SPX has been working out really well for me. So I'm just going to keep doing that until something changes. But just a reminder that I want you to go through all of your trades for this last 5 weeks, first 5 weeks of 2026, and just review what's working, what's not working, and do more of what is working, do less of what isn't working. Write it down. That'll really cement it into your brain. One last reminder, we really want to see you on Wednesday for John's next webinar. You know, a John Carter webinar is a great webinar. You know that these are the ones to sign up for. There should be a link in the comments below. Definitely want to see you there. In addition, if you have any questions, put it in the comments below. Really helps out our algorithm. If you don't have any questions, you know what I want to hear? Who are you rooting for the Super Bowl? just put anything in there because, like I said, it really does help us out. In the meantime, have a nice, restful, fun, and relaxing weekend. We will see you in the rooms next week. Thank you so much, friends.